Hi, and welcome to another Les Maisons Partners video. Today we're joined by Arnold Martin, Senior Director of Sales and Alliances for Contra Mortgage. We're just going to do like a brief little 2021 buyer market forecast for you today. So, Arnold, is there anything that you want to kind of share? I know like we have experienced a lot of, I guess, fatigue when it comes to buyers in this seller's market right now, because in a market where we have in all the major counties about 0 to 1 month of inventory for any homes under like $300,000. So kind of like, what are you seeing right now?
So we're seeing the same thing. And one of the biggest factors, although the market is very busy right now, in terms of, a lot of contracts that are coming in, but many times, we will hear, well, this is my third or fourth offer that finally got accepted. But one of the things that we are focused on is getting our clients all fully approved for the mortgage, except for the contract and the appraisal, so that when you do find that property, you also can put in a stronger bid on the property to say, I can close this in 3 weeks, or maybe even less, because my loan is completely done except for an appraisal and title. And so what people are doing is providing us not just documents for a pre-qualification, but actually for a full pre-approval. And that's a conditional approval, only subject to the appraisal and the title. That, again, gives that buyer the power to say that they can be accelerated. And there's not a question, well, is the loan approved? What are we doing? No, it's ready to go. And so regardless of whether it is seller or buyer's market, the whole factor is about being prepared, and being prepared from a mortgage standpoint is being fully approved for the loan.
Right. Because I know like that's one of the things that we talk to with our sellers and our buyers as well. Like the stronger offer is that offer that comes in with the pre-approval. And I know some lenders, like their lender will say pre-approval, but I read it and it'll say subject to, this is based on what the, buyer has told us. We're still waiting for, we haven't seen documents and tax records and all that. And I was like, well, to me, that's not really like telling me a whole lot.
Correct, because what really, that's really the equivalent of what I would say is a pre-qualification.
Right.
And when I issue a pre-qualification, it's definitely strong and I stand by it. However, I'm speaking of one step further, much deeper, where the loan is, fully and conditionally approved. And in doing that, then that everything is completely done on the file, just once again, subject to the contract and the title and the appraisal. That, again, gives you the opportunity to completely know that you're good to go, gives your sellers, everybody that opportunity, and you don't have to worry about that.
And I also want to jump in on this one, because what we're seeing more and more, and this is especially critical for home buyers in 2021, that we're seeing more and more listing agents who are actually calling the lender on the pre-approval and really figuring out how far along is this buyer in the process, because they really want to ensure that that buyer is actually going to make it to closing. Now, there's not 100% guarantees, obviously. That's never going to be, we're never going to 100% guarantee anything. However, you're more than likely, if you're getting a call from a listing agent to a lender, it's more than likely they're interested in your offer. And so they're just trying to do their due diligence. So this is just another layer of what we're seeing in the market.
Are you seeing a lot of that?
Correct. Oh, yes. I get now regular calls that, quite frankly, I was not getting this time last year. In terms of, from other agents saying, I need to know, what the deal is with this buyer, where you stand with them and everything else. And that's good.
Phone's connected. Connect to phone and try again.
Within that, that is, we provide that information, let it be known where we stand, but they also have to understand that there's only so much information I can give. just based upon the RESPA laws and everything else.
Right. Because we know like that's something that, because we've been under, contract, some of our listings and buyers, and like it just, things have kind of just fell apart with the financing. People weren't, far along in the process, or there are different things that were left out and they get caught, 10 days before closing or a few days before closing. So I see like, that happening a little bit more. And like listing agents, are just being a little bit more proactive. And
Well,
it's like
and
more
one
work,
thing,
more phone calls for everybody.
if I could give an example, based upon the market that we're in right now, people obviously are putting a lot of offers in on properties. And then what's happening is if they get further enough, especially if it's an FHA loan in the process, but that property, like the home inspection, doesn't pan out or whatever, there's a case number attached to your buyer with that property. So then they go on to the next property, and that's been approved. They like the inspection, they're moving forward, but now they have another case number on there. So we have a situation right now where we had to call the previous lender and say, you need to release this person from the FHA case number to be able to proceed. So one piece of advice I give to realtors is that if you know that your client went ahead and moved forward on an application to the point where you had a property address and they were moving forward with the file, make sure that that FHA case number has been canceled, because it could delay you.
That happened, I think, on one of our files like a couple of years ago. So that's okay. That is good information.
Arnold, is there anything that people should be looking out for as far as if they're using a VA loan?
For VA loans, the biggest factor is, once again, making sure that that veteran is eligible. We've had situations where we came out that, well, yeah, I was in the military, but I didn't get an honorable discharge. And they're saying, oh, I'm a veteran. And you're like, okay, well, great. And you get it in the process and you say, okay, we're ordering your certificate of eligibility. And then it comes back with a big 0 on there. And we're like, well, wait a minute. You said you were in the military for, 5 years. What happened? Well, I didn't, I got in this fight and, et cetera, et cetera. And so we agreed for me to just get out, and I was not honorably discharged. So for veterans, the better thing for them to do is get their certificate of eligibility before they even start the process, so that they know that they're in good shape. Or if they have used their VA loan in the past on another home, and making sure that that is all clear, because we've had situations where a person may have sold their home 5 years ago, right? But for whatever reason, VA is still showing that they owe for this property. Or if there was a previous foreclosure, okay, on a VA loan, if it was, for VA, you 2 years can have passed, and then you're eligible again to get another VA loan if you had a foreclosure on a VA. However, the VA may say, well, you owed $150,000. We only could sell that house for $125,000. So technically, there is a $25,000 loss on your eligibility. And so there's a calculation. But the point is that veterans should make sure that all their ducks are in a row before, in fact, doing that.
Okay. Good to know. Do you have any other questions, Nasia?
Yes, I think right now, because we know how incredibly frenetic this market can get, people who may be on the cusp and say, I'm ready, but I'm a little bit apprehensive. And we get all the time the same question, which is, should I wait? And we always tell people the same thing. The market is what it is right now, and there are all kinds of reasons why people buy homes when they do. And some people need to buy homes because they're moving, or because they have a job change, or something changes in their life. But it's always a good time to put down roots. So when we say what's the market going to be like? And nobody can predict the future, but if you need a home now, I think it's important that we kind of talk about, some of those challenges that people have in their mind, like, should I wait? Should I wait? Should I wait? And what we're telling them is, with these historic interest rates being so low, that, I mean, honestly, we don't know when things are going to change. So wanted to kind of get your insight on that.
Because just to kind of paraphrase, like, because there's that, like, home prices are going up, but then interest rates are low. So kind of what's that, in terms of making a determination on, like, whether now is a good time to buy?
Well, from my perspective, the first thing I say is that, just as Nasir just said, is interest rates are at the bottom. Okay, you can't go lower than bottom, and so when people say, well, I'm hearing that, because of COVID, a lot of people are going to lose their homes and everything like that, and there are going to be a lot of foreclosures, and that we're buying at the top of the market. Well, I was explaining this to another realtor the other day, and I said, for Georgia and the metro Atlanta area especially, we're not dependent upon one particular industry, meaning that this is not like Houston, Texas, that is dependent on oil, or New York, where maybe on finance or something. Really our industry first has been hospitality, but now we have technology, we have so many different things. So it's not one sector that is going to take the whole city and the whole metro area down, and therefore have the housing market to implode. So therefore, I'm telling people is that the last piece is probably 90%, if not higher, of the people that took a forbearance or modification on their current mortgage, their mortgage companies telling them most likely that they can put that on the back end of their loan, or they can pay it up. And so therefore, they're not going to lose their home. Okay. Now, if you are a renter and you've, taken advantage of not paying your rent based upon COVID and the protection, yes, there are going to be a lot of evictions that are going to occur, but that does not have to do with the housing market and ownership. So personally, I don't feel like there's going to be some big implosion on the market once we come out of COVID. I think that the metro Atlanta area and Georgia is going to stay strong because we still have the film industry that's here. We have many other industries that are bolstering and supporting our market.
Okay. Awesome.
And I probably should have mentioned this at the beginning. These are our thoughts. They do not reflect
That is
a
correct.
guarantee of anything that's going to happen or a promise of anything that's going to happen. We are not prognosticators. We don't know the future. However, based on our experience, this is what we're telling you.
That's correct.
Okay. Yes, thank you for that disclaimer. Okay, so yeah, so what, just to get an update with you, you've made a little move to Contour Mortgage since our last conversation.
Yes.
So can you tell us a little bit about the products that you have currently?
Sure. So just a little bit about Contra Mortgage is primarily, again, a residential lender. Our corporate offices are based out of Long Island, New York. And, really they have a plethora of products in terms of not only your standard FHA, VA, and conventionals, but they have what we call the non-QM products, like the bank statement loans that where a person is not using their income or their tax returns to be able to qualify. We're using their bank deposits to qualify them. We have most of the standard down payment assistance programs, such as the Georgia Dream, the Atlanta products such as Invest Atlanta, Fulton County Housing. We have the Cobb program. We have the DeKalb program, but one of our strongest programs that we have right now is the Chenoa product, which is a down payment assistance product that will allow down payment assistance down to a credit score of 620, and will provide down payment assistance between 3 and 5% of the sales price. And the biggest factor as to why this stands out among the other down payment assistance is most down payment assistance programs require a 640 and a 660 credit score, and the Chenoa product will allow 620, and it will be an FHA product. So those are, we have, of course, we have lots of people that someone called me today and said, hey, I'm moving here from New York and I have $100,000 to put down on a home. My realtor referred me to you, can you help me out? Well, great. So they're coming and they sold a home and they're, using a large amount of money for a large down payment. So Contour is one of the things that we're really enjoying about Contour is the fact that it's very nimble with the market, meaning that as the market evolves and shifts in any way, Contour is willing to and is definitely making the shift as well. So when there's demand for a particular product, or we're anticipating that, we have the ability, and my role with the company is allow me to essentially go out and get those products and tailor it based upon the market that we're in.
Awesome. So I think, well, there goes Kristen again. I thought I lost you for a second, Kristen.
No, I gave him center stage.
So the big thing for us, and I think for a lot of the home buyers who are out there, they, there are different techniques that we obviously use in order to try to, get them the home that they desired, even in a seller's market like it is. And so I think one of the keys with down payment assistance is that it really helps free up some of the money that people have saved in order to put down on things like closing costs, where in another market, they may have a seller contribute more to their closing costs. So I think that's one of the real benefits of having a down payment assistance program. So maybe you could talk a little bit about how kind of down payment can help in situations like, the closing costs, especially in this market.
Sure. So, the down payment assistance programs, again, typically, your minimum down payment for an FHA loan is 3.5%. Okay. For a conventional loan, it can be 3%, but typically it's 5%. So if you have a down payment assistance program that is at least able to take care of that minimum 3.5% or 5%, if you have other funds and your seller's not willing to pay closing costs, then those other funds can be directed toward paying those closing costs while your down payment itself is taken care of. Okay. And so it's like a partnership where it's like, okay, well, this is the amount of money that I have. And so I'm going to kick in my part. And then the down payment assistance is going to help me with the remainder and allow me to essentially get that home and not have me lose out on the contract because the seller's not willing to pay anything more for that. But I am going to put something else out there, and that is that there are, there's no such thing as free money. Okay. Right. And so down payment assistance does come with a price, meaning that typically the interest rate's a little bit higher. Average programs like the Chenoa program, where rates are below 3%, the Chenoa program, the rate is around 3.375. So you're paying a higher rate. And so we have people sometimes who say, yeah, I've got $50,000 in the bank, but I don't want to use it and I want down payment assistance. Well, if you went to a financial advisor and they did a pro forma on your money, you're doing much better by using your own funds, having the lower interest rate, okay, and have your money perform better in that manner versus a higher interest rate just because it's in some ways seen as free money. It's not. So there's a price.
That was one of the things I wanted to bring up next, so you already hit it.
Okay.
I just want to be super transparent with people, because a lot of us, kind of talk about down payment assistance. It's a great tool for people, as an entry point for home ownership, but it does come at a cost. Like I said, it's not free money. So it's important that you kind of, are very transparent about, making that financial decision. Like, this is not, something that should be taken lightly. So thank you for adding that point. So perfect.
I mean, you really have to, you really have to evaluate what is most important. And again, sometimes it's seen as free money or whichever, but there are definitely costs. There are also, you with down payment, the debt to income ratio cap is much lower. Okay. So you can actually buy more home typically when you're not going with down payment assistance. You can qualify for a higher amount when you're not going for down payment assistance. So down payment assistance are very conservative with the thresholds in terms of your debt to income ratios, et cetera. So, within that, you may be restricting yourself because you're thinking, once again, it's free money. It's not. And as you just said, Kristen, it should definitely be taken seriously. But I would say probably 40%, maybe even higher, of the people who come to us with initial desire for down payment assistance end up not getting it. And meaning that it's not that they don't qualify, but very often when they truly understand what is involved with it, they change their mind and go with a gift. They go with saving their money, some other avenue, because they're really finding that for their money, they actually could do better by doing it themselves.
Right.
And I also wanted to bring up that because obviously the inventory is a little bit low in places like Atlanta, in the metro Atlanta area, people are looking towards getting things like new construction communities. Now, I want everybody to really understand that you can still use a traditional mortgage with new construction. You don't necessarily have to go through a new construction lender.
That's correct.
One of their preferred lenders, yeah.
Right, one of their preferred lenders, because sometimes it ends up that you have a mortgage project that is so incredible that you're applying it to a new construction home and it ends up being a better opportunity for you.
Well, and if I can just chime in, not throwing shade, but the preferred lenders sometimes, because especially if that mortgage company is actually owned by the builder. Okay, there's several home builders that also own the mortgage company too. Those lenders and loan officers are not as motivated to try to work the deal out because they've got 5 others that are coming right behind yours. And so it's like, sorry, they don't qualify, and they move on because they know that they've got this list of people that are right behind them. Whereas an independent like myself, my team, we're fighting for every deal to make it happen because we want it to happen, but also, just because. But so that's also sometimes what occurs. And people are like, well, I don't understand. They looked at the same information, but they just didn't ask the questions that you're asking, but they turned me down. It's like, well, they just don't have as much motivation because they have that many deals, that are coming in.
Oh, yes.
But we want your deal.
Exactly.
We are all motivated.
We are all motivated to get you to the closing table.
Yeah.
Well, all righty then. Thank you. As you can see, it's a little untraditional today. Everyone's in their car except for me. I'm like almost in the bed.
I got it, but we're kind of silhouetted. We got the light, shining light on us,
and
the black background.
Yeah, I'm like, it's late. What are y'all still doing out? It is not late at all, but
no, it's not. It's not. I think this is my final call of the night.
Awesome. So once again, thank you so much for joining us and giving us a little forecast, telling us a little bit more about what's going on in the market from a lender perspective. Appreciate it as always. Missy, any last minute comments or last comments before we log off?
The last comments I have is that Kristen and I and Arnold will be more than happy to take a look at if you are even thinking about buying this year and you just have some questions or you're just not sure. It's best to really contact one of us and see where you are, see where you stand. And a lot of people are so pleasantly surprised by what they find out once they kind of figure out, oh, okay, this is something that I'm capable of doing.
Yeah, so, once they talk with a lender and find out what the real deal is.
Exactly.
Yeah, and then it's
not. Don't be afraid, is what I'm going to say.
Yeah.
2021, seize the moment.
Yeah, and it's probably not no, it's just not yet. So yeah,
let's think about that. Do these prescribed things, and you can make it happen.
Absolutely. So thank you once again. Everyone have a great evening.
All right.